Hi there.
Yeah, a little hiccup there in the old TC1 New Tech TriCaster department. We're going to try to sort that out in due course, but this is the downside of being a digital media channel in the cutting edge of technology, is that the technology, now the cutting edge, no problems. But anyways, Where were we, Ed? Where were we? We were talking about some interesting starts. Well, we were looking at the large cap indices.
Yes.
Kronos is back in the green, up 0.88%. Aurora Cannabis is up 0.64%, and Weed is up 0.35%. So they've come out of the red ever so slightly and put the index, but the index is still down. Now, if we go back here, let's take a look at the CSE index, which has been down the most. It's down 0.30, well, now it's down 2.93%. So there's a recovery underway there as well. The worst performer here has been Believe, which of course is the stock that I own, so that explains why it's the worst performer.
That's the one that just forward split 7 or 5 for 1 or 7 for 1 or something?
Yeah, 7 for 1. I think, and the market got momentarily confused, took it up to 34 cents, and then realized, oh wait, this is not a deal. This is just a forward split. Isodial sold off 12% today. Veritas Pharma sold off 12.8%.
Yeah.
International Cannabis Corp. This is interesting. The symbol has changed to WRLD. So I don't know. I think they might have sold the assets out of that into Aurora, and now it's a shell. Who knows? Epic Leviathan Cannabis Group down to 50 cents. Heritage Cannabis Holdings down almost 10%, which is only 2 cents because it was only trading at 22 cents to 20 cents. Another one that I own.
Yeah.
Crop Infrastructure, meh. So, anyways, let's see what's in the green here.
Anything in the green? Yeah,
Lean Life Health.
Wow.
Well, it's a 6 center. Lean Life Health, never heard of them. Lotus Ventures, never heard of them. Shark International Systems, what the hell is these guys doing on the cannabis index? I have no idea.
Body and Mind.
Body and Mind up 4 cents to 87. Boy, that's the best performance that stock's had since it got rolling. Eviana Health Corp up 3 cents to 75. So, you know, Liberty Health is back in the green. Koyos Beverage 50 cents. So the recovery's on a bit.
Recovery's on a bit. I would like to point out that the losses seem to be much larger on a percentage basis than the gains.
Okay, now let's take a look at the chart here technically. If we were to look at the MLCC, CSE, MLCC, not a valid symbol. That's always a pain. Okay, we'll switch back to here. And let's go to Portfolio Manager, shall we? Not news, not news. Okay. MLCCC, MLCSE at MLCC. Why is that saying it's not a valid symbol? Okay. Go back to our chart here. MLCSE. So that's probably why we forgot to put that. MLCSE colon. Actually, MLCCC at MLCC. Okay. Now, looking at the large, so this is the chart for the Midas Letter large cap, which is as representative as a chart can get on the marijuana space. We've got relative strength. We've got Bollinger bands.
Yeah, well, just curious why that candle is way above the band there.
Because we made an adjustment which saw companies go on and companies go off.
Okay.
But yeah, still not exactly the accurate picture that it wants to be.
Yeah, it's hard to compare apples to oranges and not expect differences.
Boy, we're really having a fun time here now.
Okay, moving right along.
So let's see what's happening some of the small caps here. Biggest performer in the small cap space, InMed Pharmaceuticals lost 10% after announcing that they lost $2.4 million in the last quarter. Which is, you know...
InMed?
Yeah, InMed. Oh, XLY. That's one of the reasons. So look at that. XLY is
Where is it?
announced that it had lost $5 million, $4.5 million today. XLY. Well, let's take a look. Let's put up XLY and look at this chart, Ed, and see if there's any technical solution that can be attributable to XLY. Is it CSE? Oops, not C.
CNX.
Yeah, XLY.
That's LXLY.
CNX.
That ain't gonna work.
Oops. What the hell is going on
Okay,
here?
why don't I put it up, and then we'll use my pen to
XLY CNX.
The magic
it's
pen.
Not CNX. It's CSE. Yeah, get your chart up, Ed.
I'll get the same chart up. How about that?
Yep. And then when you're ready to mark it up. So like 3 sessions down, they've, interesting. Auxly still got $260 million in cash.
How much?
260 million. They burned through 25 million in the last quarter, and they lost $5 million. Aurora reported $30 million in revenue, $35 million in marketing, and the stock obviously didn't sell off as much. In fact, as we saw, it's now back in the green.
Really?
Yeah. So I mean, from where you sit,
what was revenue number for Auxly?
There was no revenue.
No revenue. And what business are they in?
Well, they're in the business of they've got investments across a number of marijuana companies. Some of them they have streaming agreements with. Some of them they own. I can't remember what percentage of Harvest.
Sure.
Cannabis. They've got partnerships. They've got a diverse sort of approach, different divisions, but no, they're not revenue flowing at this point.
So we got a top. We got a sort of a spike top there. Maybe I should draw a little nose and face in there, just a little.
Well, there's a big smile.
So and then we've got it looks pretty symmetrical here. I mean, there's a line there you can draw through. I mean, it's not exact, but now we're brushing up against that line here. That's sort of like looks like resistance. It shot up to about $1.20 on Friday. Sorry, on Wednesday, and then bounced off it. We've had 3 days down. This is obviously a very key level here, I would say.
So what's that, 80 cents?
Yeah, I mean, it bounced off there, tested it, shot up 50% in a matter of 4 or 5, all tied into the rally in the sector. And now we've dropped off. We're pretty close, back in here. We're getting closer. You wouldn't want to see it go through there, because then I think we have to put up a, let's just see here. I'm going to just put up a six-month chart. And there's lots of stock in this thing, but you're saying they got lots of cash, eh?
They have a ton of cash. They did a bought deal with BMO for $100 million plus, which I think got upsized. I don't know what it finished at. Yeah. They just saw $80 million in warrants exercised in the last quarter, 90 million maybe. So yeah, it's a company that has a bit of a let's just say troubled
Sorry,
structure.
folks.
But it's got lots of cash.
Yeah, look at this move here. This is
looking at Edwards NDI.
There we go. We're going to get back up here and there. So that's when it really had a major move, all the way up here to almost $3, and we've given it all back, come back to that level here, bounced sharply, and we just went through that analysis over the last few months. Yeah, that's your real support. You don't want this thing going lower, but with $260 million in cash, I know. Well, look, we're back to 90.
Yeah,
and then we've got this little level here. We said, we break that 80. If we break the 80, we'll probably test the 70. There's so much cash here. It's protected by its cash. And you say they burned through $25 million in the last quarter?
Yes, sir.
So $25 million a quarter. Now they probably are spending more money right now than they would spend each successive quarter because things are starting to come together.
Yeah, I don't think the burn rate is representative of a operational consistent burn rate. I think it's very fluid, and in some quarters they might amp it up when they make acquisitions or do partnerships. I think the cost of marketing their product once they get it might go up, and but that's the thing, that for me the weakness in the whole streaming model as it pertains to cannabis is that the streaming companies, be it gold or anything else, always likes to think that they're protected from the downside by the fact that their acquisition cost in the streaming deal is a percentage of the actual spot price of whatever commodity it is.
Yeah.
What is not considered or disclosed or discussed even in most of these companies is what happens if the commodity price goes down to a point where the supplier in the streaming arrangement can't afford to stay in business. Well, that undermines not only the supplier's deal, but it also undermines the streaming partner's deal. So, the proposed value proposition in part with a streaming model is that you're protected from the downside. I think that's only reliable as long as the commodity price doesn't drop below where it's possible to be produced. So if you look in what's happened in the States, in Oregon in particular, where the average price per gram of marijuana has gone down to $5, at $5 a gram, a lot of these companies will not make money because their all-in cash cost of production might be $1.50 per gram, but the costs of marketing and the costs of overhead, the cost of compliance, the cost of all these things adds up to a lot more than $4.50 a share or $4.50 a gram. And so at $5 a gram, if that's your retail sales price, and you got include everything else in the food chain in that, and you're a streaming guy, I don't see how you're going to stay in business. Mind you, with $260 million in cash, you can easily pivot.
Power.
Well, they can pivot to a new business within the space. And I think that's why even Auxly should not be counted out because they've managed to build this cash position.
Don't think it's going to trade like an ox.
Like an ox. An ox, well. So let's take a look at TRST now.
Okay.
TRST.
And big news today, big corporate news.
Well, so the resignation of Brad Rogers, the president and the vice president of cultivation.
Yeah.
Without a press release. And that's kind of...
without a press release?
Yeah, there was no press release.
Well, how do you know what happened then?
Because I talked to Brad.
So Brad spilled you in.
He did. Well, I heard a rumor. I called Brad. He confirmed the rumor is true.
CA or CNX? CA.
Yeah.
Let's take a look here. Let's just take a look. I got a friend who's got a major position in this, and he said he was going to, after the thing settled off a bit, he was going to... Wow, that's... Okay, so here we are. We're going to put the chart up here, and it's because it's... they've only been trading for... there we go. Okay, here we go. So we got a major bottom there. We got a major bottom there. We breached this high over here, and this is right into the legislation being passed. And but then all the way back here, but not quite as low. And we bounced nicely from this level here to here. What I think I'll do is I'll revert to a 6-month chart. No, that's not going to work because I got to go back.
Let's go to 6 months.
Yeah, let's go to 6 months.
I'm at 3 months right now, and the chart looks way better.
So 6 months, we had a monster move going into legalization, and it. Oh, here we go. Let's go back to 6 months. Click. Touch. 6 months. There's legalization, and then look at this drop. Now we bounced here. We really want, I think, look. Technical analysis 101. We're back to there. You'd want that to hold and start another base. I think there's a lot of potential for this to come back to at least in here. Mm-hmm. I think there is. Again, everything in technical analysis is subject. There's no, this is going to happen.
Fast rule.
It's probabilities.
Right.
And I'm saying the probabilities are, this is a very oversold, and a lot of people tell me this is a great company.
Yeah.
Relatively speaking.
We've been to their site multiple times, and It's my favorite. I'm kind of in a bit of shock that Brad has parted company. Because,
Really? Did you have anything to do with that?
No. Not that I know of. Anyways, wouldn't that be funny?
Okay, so there you go. Again, great company, and I guess they got some good revenue numbers, et cetera. But we're at a critical point here, ladies and gentlemen. I mean, if the market's 821 down 49, yeah. So I don't know what the low was in here. You'd probably find out, but yeah, I'd like to think that we're heading into a bounce. So corporate change.
Yeah. Yeah.
What's the market cap of this thing? Is that
CannTrust? Let's see. I'll tell you in just a second.
I know what I gotta do. Will that be under share information?
Well, that's one way to find it. Certainly, we have market cap of 867 million.
Big numbers.
Well, it's only got 105 million shares out. So in terms of in terms of capacity, of built capacity, CannTrust is one of the top 3 in terms of built capacity.
Right. And so here's a question for you. And again, I'm more of your sort of guy sitting on the fence looking at technical analysis. I don't have favorites. Mm-hmm. I'm trying to be as the voice of reason.
The voice of insanity.
I'm looking at the charts so I look at this and I say Trust versus Huge. Their market caps are considerable, right?
Yeah.
And are they in about the same place in terms of, because Huge is relatively new and Trust has been around for a while. So would Trust be a little bit more of a senior company?
That's a Huge?
Yeah.
Yeah, absolutely. CannTrust has operations in Niagara Falls and Vaughan, Ontario. They have customers. They've got over 50,000 customers.
A lot in the medical side.
Mostly in the medical side.
See, I'm learning from this stuff too.
They launched a recreational line.
Yes.
But we don't have the data yet to see it exactly how effective or what their portion of the online sales from these cannabis stores across Canada have been, and we don't have any data yet on what their sales have been in the physical stores in provinces where physical stores are legal. So we're basically waiting for a Q1 financial statement in calendar 2019 to see what these companies are actually experiencing on the balance sheet as a result of legalization.
When is Trust reporting?
CannTrust reports
Wednesday?
Thursday, I thought.
Okay. I'm going to try to do tonight when I'm on the train, sitting back, and I'm on the wagon, but I might have a glass of wine.
That's not on the wagon.
Well, it's sort of on the wagon. For me, it's, one glass.
One glass of wine.
Yeah. I think we really should follow how these things are reacting to their earnings, because if you recall, 3 months ago, Tilray came out with results, and they were showing growth on the top line. Losses was getting bigger, but they were showing revenue growth.
Yeah,
and that was the beginning of that huge move from basically 30, 40, $50 to 300.
Right.
But the 300 was an anomaly. Let's face it.
Yeah. So
OH down 70 cents. That's a big dropper.
Yeah. So one of the companies that reported earnings today was Planet 13. And the reaction to its earnings announcement here, looking at the chart, well,
it's only down 6 cents. It just went off.
Yeah. So not bad.
Down 6. So they came out with results, did they?
They did indeed.
And the stock did get up to 3 and change, and then down to 270. So they're bouncing around. The S&P's at a juncture too, by the way, and the S&P is the 500 companies in the U.S. that are the behemoths of all companies, generally speaking. And I think I'm going to put that chart up because I think it's all tied in. If we can just look at it for a couple minutes, what do you think? Is that all right?
Yeah. Which chart?
SPX, which is SPX. And I'm going to put up the chart, and here it is. And I'm going to put up a 3-month chart. And here we go, folks. I think this is, what am I looking for? And I'm going to come back to this almost daily because I think this is, as this goes, everything's going to go. But we had a major top here, or at least that's the all-time record high. You know, I think back here, Amazon was $1 trillion. And then we've had this monster drop. Then we had a little bump up rally, and that's your what I'd like to think is this looks like a reverse head and shoulder. Mm-hmm. So I'm going to clean that up again. But so look at that and that. I think there should be some correlation there. This is the reverse head, this bottom. I'd like to see this hold, and I'd like to see the lows not go lower, or at least close above the lows of a few weeks ago. The market just closed. And that happened today, so that's good. Cool. And look at amazing how this, look at. Anyway.
That is the SPX. Now, we're going to have Alan Brochstein is going to join us now from Houston, Texas, and discuss with us the action in the market today, as well as talk about some of the stocks he's following about in the U.S. We'll just wait for that to happen. So,
okay.
Closing bell. We have. There's Alan. Never mind the closing bell. Hey, Alan, how are you?
Yeah. Doing all right. Better than the market.
How you doing? And you're in Houston?
Hey, better. Can y'all hear me?
Yes, we can.
I can't hear him, but that's okay.
Seems like there's a little bit of a lag.
So are you heading to Las Vegas this week, Alan?
I'm not. It's earnings season. Somebody's got to man the fort.
I hear you. I'm in the same boat. So we saw Aurora report earnings today. What did that do for you?
Well, I can't get on their conference call today.
Jesus.
Sorry, say that again?
Yeah, we seem to have a bad connection.
Yeah, it's not the best.
It says poor network connection.
Oh.
Can you call me right back?
Sure,
James?
Let's call him right back.
Okay.
Yeah, I'm gonna try something real quick to fix it.
Okay. Anyways, little technical difficulties there in Skype land. Yeah. So, at the bell, the Midas Letter Large Cap Index was down 1.06% to 10,838. The Midas Letter Small Cap Index, all companies above 500 million, is down 2.89%. The Midas Letter Venture Index, which is all companies listed on the TSX Venture, exclusively Canadian operators, is down 2.76%. And the CSE index is down 3.05%. Wheat is back in the green, up 40 cents, so closed up 0.78. That's
ACB?
ACB closed down 16 cents, or 1.71%.
I can live with that.
You can live with that?
Yeah, well, I own 1 million shares. Not.
Yeah, and so Afria finished, why isn't Afria shown? Oh, because that's the wrong symbol. We've got APHA. What happened to Afria? Afria's been really acting. Afria finished down as well, down $1.57 or 0.35%.
Yeah, that seems odd, doesn't it?
Oh, sorry, that's the wrong line I'm looking at. Afria finished off 9.5%, down $1.57 to $14.96. So that, yeah. So that's a bit disappointing. Kronos Group finished down 4 cents to 11.26. So it's really been a
mixed bag.
It's almost everything is down. I mean,
Weed is not down. Tilray's not down.
Yep. Okay, and those are the two that aren't down. So hardly a mixed bag, rather uniformly ugly, but not too bad. It's just down, on average 1 to 3%. So, and then let's now if we look at the broader markets, let's see if I pull out my.
Oh, the Kira, which is, a lot of people got to have sore bums from that one. I mean, that thing is just sucked up a lot of money.
Alan's back.
Hey, Alan.
Is it coming through better now?
Well, you are clear and you're not glitchy, so I'm assuming yes.
Yeah, I'll take the blame because it's your show, but I don't know about this.
Well, considering we're talking on Skype and we're crossing a distance of, I don't know how many tens of thousands of meters.
Feet.
And
it's hard to get through the border. They got that border patrol all stepped up since Canada legalized, so they may be blocking me.
Well, that could be. That could be. So before we got cut off back there, we were talking about the Aurora Cannabis earnings, and what was your take on that?
Yeah, well, I was complaining that I couldn't get on the call, and I know they're trying to cut back on their spending, but I don't think limiting the number of people on a call is going to do it. But kidding aside, without having listened to the call, but just reviewing it, I thought it was a good quarter. It kind of highlights how difficult it is to make, short-term forecasts on revenue. They only recognized about $600,000 in Canadian adult use sales. And I think there were some analysts that were expecting more. It's really hard to tell. You don't know how that revenue recognition works in the very short term. But, my read of it was it's like a lot of cannabis companies these days, really strong revenue growth, but huge spending. And they talked about that. They must be cognizant in their MD&A. And I think even in the press release, there was a lot of discussion about how front-loaded some of the spending was in advance of legalization in Canada.
Right. I found it interesting that one of the statements in the press release said that they were 30% of the sales in the Ontario Cannabis Store, which, so I look at the financials and it was $600,000. Well, if that only came out of 2 weeks of sales in the cannabis store before October 31st hit, you really got to wonder how much of a market we have here in Canada. So,
well, we've been talking about that, especially Ontario, and I spent a lot of time yesterday actually kind of reviewing what I think nobody's focused on right now, which is the Canadian retail space.
Right.
And obviously, in your province there in Ontario, there are no retailers right now. It's just the store. James, have you been online to look at that store?
I've actually successfully made some purchases, Alan. Here's my organogram product.
I love that package. Beautiful. Beautiful.
Well, it's actually kind of neat. It's airtight, and it's got a child-proof lock on it here. I don't know if you can see that.
Those things always kill me. Yeah.
Yeah, and then it's got this dried bud in here, which is quite impressive looking. Look at that.
There you go.
And they've got a little moisturizing packet in here to keep the humidity at the right level.
Yeah, is that Boveda or the other one?
That's not a Boveda. It's another thing. It's called Boost.
But it's not idiot-proof, I don't think.
It's called Integra. Anyways,
Integra's the other one. Yeah, I really struggle with those things. I end up having to get scissors and attack them. Really tough. But James, when you went online, you must have seen how tough it is. And I know you know a little bit about the product and who sells it. But to the cannabis, there's two types of buyers, really. People that are consuming cannabis right now and people who aren't. And people that are consuming it right now, they probably need a higher value proposition than going onto a website like that and buying. And then for newer people, you just can't learn anything. I spent some time yesterday kind of, clicking. What can you actually learn about the product? That product that you hold in your hand, you can't even tell on the Ontario Cannabis Store website that Organogram is the manufacturer. All you can see is the brand name, Edison or whatever you add.
Right. Well, actually, it's funny. In some of the cases, if you scroll way down the page, it will tell you who the LP is. But you're right, in most cases, the brands are not identified, so that at no point does the consumer have recourse to identify who is the person who holds the license who grew this product. A lot of this...
When you go to Amazon, James, when you go to Amazon, you see like 4 stars, 5 stars. There's all sorts of, or Netflix, whatever website that's popular. And I know they'll get there eventually, but for now, I think it's pretty silly to expect people to buy in Ontario like that or across the rest of the country. And across the rest of the country, there just aren't that many stores open yet. So You and I talked about this before. It's great that Canada legalized, but it's rather unimpressive in the way it went about it. And it's unfortunate that they didn't move to physical stores for medical like a year ago or something like that, which would have then made this a little bit easier to transition.
Yeah, you bet. So, Alan, so what's your impression? I mean, it's a real dichotomy. In the United States, there's no federal sort of regulation that covers both medical and cannabis, but in the states where medical is allowed and recreational is allowed, the state of the retail outlets is really highly advanced compared to what they're doing in Canada. And so, you know, it makes me wonder, is this a case of where as soon as de-prohibition happens federally in the United States, is the Canadian market more or less going to get wiped out by the sort of aggressive U.S. approach to marketing that allows for advertising, allows for every product under the sun to be included in both the medical and recreational regimes? What do you think about that?
Well, I think that's a loaded question. First of all, when the U.S. gets de-prohibited or whatever you said, I don't think that's happening anytime soon. I think it's fairly obvious that the Canadian producers are newbies. And in the United States, you know, it's a much broader market. It's highly fragmented, but you have people that have been doing this for many years. You have some newer companies as well, but a nice mix, especially when you go to like Colorado, where you have a lot of innovation, both on the retailing side, the branding side, and mature companies. In Canada, you know, these are all relatively new companies. They've been forced to be vertically integrated, and they just haven't had a lot of time. So, you know, this talk about them being wiped out, there may not be this de-prohibition, and it's not going to cross the border. So I don't think that's really it. And I think the bigger story, and I wrote about it this weekend, is, you know, we know that last October, a year ago, people were very concerned about the LPs that had investments in the United States, mainly Afria, right? And the TSX was coming down hard, and we weren't sure what was going to happen with the CSE. And it all ended fairly much as we expected, that the CSE was able to maintain the listings of companies that were breaking federal law in the United States, while TSX took a more conservative route for it and the TSX venture. Now we're starting to see companies in Canada figure out how to get into the United States and keep their not only TSX listing, but also their New York Stock Exchange listing. And so I wrote about that yesterday. It's not like it's news, but I don't think people are appreciating just how big this is. You know, you have these big capital raisers in Canada that have the whole globe, but they want the United States. I mean, you listen to Vic talk. I know you've had him on before. They want to be in the United States, but they can't. They want their TSX listing and their New York Stock Exchange listing too. They have figured out how to do it using kind of creative financing with warrants and things like that. And it's not a layup, because you have to trust your partner. There has to be this ability to give up control, because if Afria tries to influence Liberty, then there's an issue. So, for instance, if you look at Canopy Growth and also Canopy Rivers, that made an investment in TerrAscend a while ago, earlier this year, TerrAscend decides to enter the United States. That could have created a big problem for Canopy Growth and Canopy Rivers. They trust TerrAscend. They also know that the chairman of the board's their friend and a big investor as well. So that's a good situation where those two organizations could take back what's called exchangeable shares. And these exchangeable shares allow them in the future, when this de-prohibition happens, or maybe something less, maybe it's just the States Act that just gets the TSX a little bit more comfortable. And then at that point, all of a sudden, Canopy Growth owns a huge U.S. operator, a big chunk of it. So I think that's really what people should be talking about right now, not so much Canada's going to be put out of business by the United States over time, because A, I don't think we're going where you think we're going, and B, there's so much money that's been raised in Canada, and these LPs are sitting on it. Look at Canopy Growth now. They just closed that big deal. So they'll figure out how to get in the United States.
Yeah, well, you know, Canopy Growth bought EBU, which is a Colorado-based vendor of hemp products and THC products.
Well, they don't sell products, actually. They used to, but they no longer do. It's just an intellectual property company.
I see. Really?
Yeah.
Oh, okay.
There's no revenue.
There's no issue there in terms of them sort of flying in the face of TSX rules. Oh,
right.
That's
if you look at the press release, they addressed it. But,
okay.
I mean, it's easy to get that confused because historically EBU has sold products, but they made a decision to focus on the intellectual property side, and that's what that deal's about. But had that deal happen in the future, maybe EBU wouldn't have made that shift. I don't know how long that was in negotiations.
Right.
And to be clear, they're not buying EBU. Just to be real clear, they're buying the intellectual property of EBU, which is EBU, but EBU is going to stay open until the deal closes, and then they'll wind it down. So.
Interesting. What is the intellectual property that EBU has that Canopy's so interested in?
Yeah, I think it has to go with genetics and the ability to get a high THC with no CBD. I think that's part of it. I've never looked at all their intellectual property, but that was a big part of what they were working on.
Right.
On the genetic side.
How much of a threat?
And there's also some stuff they have on technology side too.
Okay. How much of a threat do you think these, this growing trend towards outdoor, large-scale grows of cannabis for typically low THC, high CBD, industrial hemp, as they call it, which I find that, first, let me say, completely misleading because it's still the same plant, the same species. Just because you select a strain that grows 0.3% THC does not mean that you can't take the flower and the stems and everything from that and concentrate the THC into a much higher level. So that whole argument to me is I just don't understand how that fails to be recognized by people. But certainly the threat to me of large-scale outdoor grows of, even though it's low THC, and I'll default to the misnomer industrial hemp, that's obviously going to create a great supply of hemp extract and concentrate on the market. Mm-hmm. And to what extent do you think that is a existential threat to all of the growers who are focused in large part, or reliant at least in large part, on revenue from CBD products?
So it's a pretty complex question, or the answer to it just depends on who you're focusing on. Are you talking about in Canada or in the United States? I want to be real clear before I.
Well, for the purposes of this question, let's say the United States.
Got it. So I think you have to keep in mind that the CBD has really taken off. It's unbelievable, and it's a early market still. And you have 3 publicly traded companies that are, 3 that are publicly traded. There's more that are actually scaling up, and there'll be more publicly traded companies that are working this CBD from industrial hemp. So who are they threatening? Are they threatening the typically mom and pop chains in California, not chains, but stores in California and Colorado and all that? Yeah, maybe a little bit. Some people will buy CBD products in state licensed dispensaries. But if you think about it, most of the United States doesn't shop that way. They don't have medical cards. I know that some states are legal, but people want to buy this stuff either online or from Walgreens or Whole Foods. And so that's where the market's headed. I'm just amazed at some of the big brands that are kind of adopting CBD. It's often for beauty products and things like that. And it's still a little bit murky legally. So moving forward, if we get the Farm Bill through, which I think today McConnell guaranteed it, which there's no such thing as a guarantee in politics, but I think it's presumed that's going to go through. I don't see that as detrimental for state-run businesses. I think that the market is just getting started. It's very big. We're seeing other types of channels open up, like Whole Foods and other health food stores, online, even drug stores, and all sorts of products. It used to be you'd go to the dispensary and you'd buy a tincture, and that's pretty much it. Now you're starting to see a lot of different formats. I know CV Sciences is one of the leaders in the United States, and they introduced a new product, gummies, recently. I mean, not that that's such a novel product, but for them it was, extension of their product set. and that drove a lot of their growth. I mean, these companies are growing over 100% year over year right now.
Yeah. Well, you say a couple of things there that I would think would strike the fear of Jesus into the purveyors of vertically integrated growers, those who are LPs that do their own extracts, create their own finished products, and sell in their own dispensaries. If you're telling me that Walgreens and Whole Foods are about to enter the retail mix as outlets for where customers can get their CBDs and THCs, it makes me wonder how much of the market is actually going to be left for stores whose sole product is THC and CBD related products.
Yeah, well, the health and wellness market's probably a little bit different. A lot of the medical cannabis dispensaries are dealing with people with much more serious needs that need higher levels of CBD as well. So I don't know. I mean, it's something to think about, but I don't believe that the current market is really dominated by CBD. It's very popular, of course, but most of the products out there tend to be not 100% CBD. They tend to have THC in them, and THC is obviously very popular still for even the medical set.
Yeah. All right, Alan, let's leave it there for now. I really appreciate your participation. Again, thanks so much. We'll see you soon.
It's always great. Thanks, James. See you, Ed.
Great. Now,
so it's just from listening to the conversation, do you feel that there's a threat here of America getting bigger and bigger and dwarfing?
Well,
that's the sort of the tone I got.
To Alan's point, there is no immediate threat of American cannabis competing with Canadian cannabis markets or vice versa. However, in that theoretically we are nations committed to the concept of free trade, then at least conceptually, upon legalization, upon harmonization of cannabis rules across the continent, then you would think that the ability to compete across international borders should be an opportunity. And I think that, my personal feeling is that could happen a lot faster than people realize. As soon as cannabis becomes a major contributor to the national GNP bottom line of the United States, then a guy like Trump is going to ram access to Canadian markets for U.S. cannabis suppliers down the throats of Canadians once the de-prohibition and all that stigma has come off it. Now it's just another commodity product. And could you imagine telling the United States that you're not allowed to sell American milk in the Canadian markets? That would upset the free trade agreements and the nature of the free trade philosophy. So that's what I'm thinking. I'm thinking much more longer term, much more bigger picture in terms of the decades as opposed to just the immediate years ahead. I mean, if I was building a portfolio of legacy, or of rather what I consider nest egg legacy stocks that I'm going to hand off to progeny in perpetuity, then I want to be thinking about the much longer, deeper picture. I want to pick out the winners now who are going to be the ones standing and the main beneficiaries of the cannabis economic revolution that is certainly starting right now. So he makes a great point. Is it going to be the Walgreens and the Whole Foods, the shopping stores, the liquor stores that are exactly? I mean, if you think about it, well, those are the stores that everybody goes to, once or twice per day, anyways. And so if you can get your weed products there, then what does that do for the dispensary? I mean, you don't have stores that specialize in root beer. You just don't have it because it's just another consumer packaged product. And where's the best place to get the widest selection of consumer packaged products? Where one stop you get everything. Yeah. Giant supermarkets, big box stores. They're going to own the retail. They're going to own the retail margin in the end, I believe.
Do you see marketing boards getting involved here in Canada in the marijuana space?
I don't think so, because we've already sort of fractured the whole thing up in such a way, like it's already fractured by province on a territorial basis. It's also fractured within the product category into medical and recreational. So arguably the medical boards, or rather the colleges of physicians, are the regulators, or the the product boards on the medical side. And on the rec side, it's a little bit more open season. You've got the government in the socialist provinces of Ontario and British Columbia who are trying to own that trade. But, so far, I mean, that's all we have to do is look at this insane labeling here to understand that the government has no place marketing any consumer packaged good. That's certainly not their strength nor their competency,
Right.
as we can see. So
Right.
you got to wonder to what extent does that become an election issue? And even at the provincial level, we've had Doug Ford say he thinks that cannabis should be in the hands of private enterprise and not be handled by government. I think that's, say what you will about Doug Ford. I think he's right there. And is the
I like Doug Ford.
Well, I've never met the man. I mean, there's some of the things he says I don't agree with, and some things I do. But we're not political, Ed.
Yeah,
we're not political. I'd vote for you if you were running.
James for president.
Nope. Ed for prime minister.
James for talk show host.
Ed for king of the world. Ed for.
I'd be like, I'd like to be king of where I. Never mind.
You're not confident in your one-liner ability today, Ed?
Yeah.
Anyways, so we've got some great segments coming up this week.
Yeah.
That the audience is going to want to know. We are going to take an examination of how the Canadian government sellers of cannabis are doing. We've certainly seen examples of mislabeling and sensationalist warnings on packages. We are going to be looking, we looked at craft growers today. We're going to look more closely on what is the opportunity in investing in a craft grower as it pertains to its future potential for a takeout by a larger company. Sure. We have all kinds of great segments coming up. We've got all kinds of great guests coming up this week. It's the 100th show today, and we're just going to keep plowing along. We're going to be launching Midas Letter Los Angeles in January this year, and that's where the main program is going to come from. Now, let's finish it off with a look at this little chart here, which is, or it's not a chart, but rather these are the Canadian companies that are listed in Canada on the NDI and are operational in the United States. So we've got Planet 13, Ianthus, Australis, Tilray. Well, Tilray is not listed in Canada. Tilray is only listed in the US, but I put that there as a reference point because it is really, in terms of all cannabis companies operating in the US, that has got to be the bellwether. Would you agree with that? I mean, Tilray is the bellwether of everything happening in the space in the US. Cura, look at Cura's down still to 820. Guys, put money into that.
You mentioned Tilray, and the comment came out this morning somewhere in one of the news items that Tilray, Aurora, and Canopy Growth were the most heavily shorted weed stocks, and that that group as a whole are down insane amounts of money from a year ago.
Which group? The U.S. companies.
The guys that are shorting Tilray, Canopy, and Aurora. Those are the most heavily shorted.
Okay.
But then they continue to throw money. The shorts keep selling.
Okay. A couple of questions from our live audience that we're going to answer now. Javante Music asks, what are some of your favorite moments in your 100 episodes? Biggest gains, biggest losses. Now, episode 1 of this show actually only happened back in, was it August? I think it was August. So in that period of time, what are the biggest wins we've seen? Well, we've seen 100% wins in some cases.
Well, from the time that Constellation Brands threw that dough in, I can't remember. I remember
that was August 15th.
From that time on till legalization, I think Aurora went from 5 to 15. I was a triple, in effect.
Yeah.
There's the big one. Yeah. I would say that one sticks out only because of the market cap.
Right.
Afria.
Well, I think for me, the biggest gain that I didn't participate in, just just to make that clear, was obviously Tilray, which went to $300 within 8 weeks of starting trading.
But that one day was 160-ish to 300, back to 150. So that was the sort of the...
Yeah. Benjamin wants to know, what American-based company will become the canopy of the USA? Now that's an interesting question because Canopy is already diversified into 30 countries around the world. So what American company is going to achieve that level of international penetration? That's hard to say because there are no U.S. companies that are able to act internationally at all at this point because it's federally prohibited to do so in the United States. But if I was to say which company in the United States has the best chance of becoming so fleet of foot internationally, I would have to say the company is called Constellation Brands, and through its distribution channels globally with Corona and its partnership with Canopy, I think Constellation Brands will be the cannabis company.
And they got the cash.
Well, they got the cash. They got the
cash flow.
They got the weed. Javante Music, another question. Who are the major players for BEV market if Coke is out? The beverage market if Coke is out?
Pepsi. That's a little humor there. A little bit of humor.
Yeah, well, I would say that there's going to be a point where every beverage player has a cannabis product out there.
But does a company that is not involved, like I can understand a beer company because beer is already something that's going to alter your brain. But
beer alters your brain?
Well, beer
doesn't alter my brain.
It's mind altering.
Nah.
Oh yeah.
Really?
Drink a few liters of it.
Yeah. 3 liters of beer? Oh, that must be draft beer. I prefer to drink my beer in bottles.
Okay.
Interfacing wants to know, how are stores going to get licenses in Ontario next year? Well, I can tell you how that's going to happen. It's going to happen through the extremely inefficient, cumbersome, probably partisan process of, depends who's in charge next year. How are stores going to get licenses? I imagine that's going to happen through the Ontario Cannabis Stores, which is controlled by the Liquor Control Board of Ontario. I think that's going to be the process by which it's determined who gets stores and who doesn't. Now, if Doug Ford gets his way, however, and follows through on his promise to privatize cannabis, it's anybody's bet. Anybody who can fog a mirror gets a store. Anybody who can get through the security protocols, that would be my guess. And a third question from Javante Music, who's evidently quite prolific with the questions. How far is Canada from allowing coffee shops, cannabis cafes? Now that's an interesting question because we already have several brands of cannabis coffee shops that presently do not sell cannabis products, but do sell cannabis paraphernalia and do offer education on cannabis products and typically have some association with a licensed producer. Now, the only question is, Canada said that they would license beverages next year. Will they license consumption of cannabis products in public venues like coffee shops in that same round of new rules? Impossible to say. My feeling is definitely not. Canada's very conservative when it comes to allowing things to happen in public places, but that remains to be seen. Anyways, Edward, that's our show for today. If you liked what you saw,
a good name for one of those shops would be Canafe.
Canafe, there we go.
Okay.
Don't forget, if you saw a clip you like if you just wanted to see that talk with Alan Brochstein, or you wanted to see one of the 4 East Media vignettes, you just head over to Midas Letter Clips at YouTube, and you will be able to see those there. We'll see you tomorrow.